Right, this is Mike. This is just like a small video just to show like the ways in which I've been trading the non-farm payroll today. So today is the 5th of December 2014. Non-farm payroll has come through as being positive for the US dollar. Basically, like all it did was like going back to like the 3 steps in which I covered like in a previous video. If you haven't seen that, I'd recommend like going to watch that. The first step was to ensure that you're relaxed and like not jumping in to like trades. So like the first thing would just to be just sit and wait before you do anything. Though you need to prepare, so you need to prepare like your charts. So like before non-farm payroll came out at past, which is about here. Before that even happened, so we'll go back. So that's all the information you'd have. Before that even happened, you'd have this sort of pattern. So what you've got there is a low, almost double bottom, like just a weak double bottom, but it is like a double bottom, and then a high that was created here. So what you do is just set up your Fibonacci extension tool from bottom to top, so the extension is going down. And what you could also do as well, because you don't know what the outcome is, do the other way as well. So you've got Fibonacci extensions going like up and down. So you've got extensions going up 161.8 and 161.8 going down as well. And then you just follow it across and just see what happens. The first level you'd be looking at would be like 161.8. You can see here though, at 161.8 it just sort of broke through completely. On the 1 minute chart as well, there was no pause or anything. It was just like a straight 1 minute candle broke through 161.8. You can see here though at 261.8 there was like a bounce, like just a small bounce. So you could have got in around about there once you saw it stalling just on a 1 minute binary trade, which is something that I did. And then the price came back up, and it came back up to 161.8. Remember, like a support becomes resistance, and resistance becomes support depending on which way it's like broken through. So if it's broken down through support, it then becomes resistance on the way back up. So this support level, which you could call like 161.8 is a support level, turns to a resistance level. So the price comes back up, touches it, and that's another good entry for a put, which I took as a 5 minute put, and that was profitable. Then it came back down, to broke through 261.8. Remember, like you're looking for stalling on these sort of like high volume moves. So like non-farm payroll, any news, you're looking for sort of definite areas, but areas where it's stalling, it's not sort of breaking through with a candle. So as you can see, like the candle like breaks through the 261.8, so you're looking for the next level. The next level is a really strong support level, and that comes from I'll do it down here on the daily. That comes from this double bottom, which was created, which is a round number, and it's a really strong round number. It's at 1.228, and that proved like a really strong support level from yesterday, and that was where it bounced yesterday. So that was the next area, and you can see there that it started to stall on the 1 minute chart. So when you get a price target, always look at the 1 minute chart and just see like how much it's stalling, and then take your call or put at that level. So you can see I took a call there, one call there, which is 1 minute, I think it was. Yeah, 1 minute. Well, it's Markets World's like 1 to 2 minute calls, and another one here. The second one is stronger because it's a double bottom. So you can see like when it pulled away, I actually took about 3 calls there, and they were all like 1 minute calls. Then what happened was the price came above the 261.8, so it broke above it and then came back to it, and there was a few calls that I took there. The size wasn't as big. With these moves, I'm a bit more confident with these moves that are sort of like I don't know, they can sort of they can easily fail these moves. So the size of the like percentage size wasn't as big. I was actually using like 10% on these. Well, on that one I used 10%, on that one I used 5%, on this one I used 10%, and that one I used 5%. Here I used 2% on a few of them, and then when I saw that it was continuing up, the MACD had crossed. The Wilders RSI was becoming like very positive. I increased that to 5% on this entry. What I'm waiting for now is for the price to come up and touch this 161.8 again. Although, and that would be for a put. I just realised that my chart stopped moving. I don't know why that is. Don't know why the timer stopped on that. Right, I'll just swap to another chart. Yeah, so like while waiting for that, there's a couple of entries I'm waiting for. The first one is 161.8. Another one is just the whole move, like a Fibonacci retracement of the whole move. So I'd take that from the point at which it started down to the point at which it ended. Right, looking at this other chart, it looks like it's already done the 161.8. Right, I'll just change this. Sorry about that. It's a bit amateur. So this is the actual move, was from there down to there. So you can see there that was a 50% retracement. There was a put that was taken there. I didn't actually take it because I was doing this video, and I didn't think it would go up as quickly as that. So yeah, there's a put that you can take there. That would have been, well, that was a 1 minute. You could take a 5 minute put there now. So I'd take a 5 minute put there. The next entry would be probably like 61.8, just above it. But this 61.8, not this one that I'd created before, which was... so I just have to redo my levels. Which was there to there, so it would be sort of like this. Where is it? Yeah, so it's the same area. So 161.8 there is also 50% retracement. So the reason to get into that trade, you've got like double reason to get into it. And I always say, like, when you're building up a case for making an entry, always have a few indicators that are pointing your way, but that are backing up like what you're thinking. So if you've got like a massive move like this, it comes down, it's obviously negative news for this pair, for the euro. So you're looking to sell that. You're looking to follow the trend. So if you've got like a bounce up into like these levels, there's going to be a lot of traders who are going to be looking at these levels. So if you've got traders who are looking at like the 50% retracement, you're targeting them. If you're looking for traders that are looking for the 161.8, which was the support that has now turned to resistance, you've also targeted them. Yep, that was all I wanted to cover today. Good luck. Thanks for listening.